Welcome to Mortgage People Podcast. I am Sean Humphreys. I'm joined with my good friends and colleagues, Christian Vitrano and Von Zawadzki. Guys, I got a joke or a riddle for you. How are the Toronto floodwaters and mortgage rates in Canada? What do they have in common? I
Um,
don't know.
I don't want a lot of blank space at the beginning of our podcast, so I'm just gonna say what do they have in common, John?
They're both going to be lower next week than they are this week. Good,
Fantastic.
right?
It's
Good
a
joke.
good one.
Bad joke.
It was a good one for sure.
Yeah.
Now, speaking of low rates and low floodwaters, a lot of what we do is look at credit scores, and so the minimum sort of credit score, beacon score that an A lender will really consider is 680. But sometimes we get a lot of different stuff, and I think that Sean, you said you had a client that had no beacon score.
Yeah, I had two clients within like 2 days that had zero credit scores. So like one was a beacon reject, which means like there's some sort of error that we're getting when we pull the score and we get a zero score. And usually that's just, hey, call Equifax and they're going to sort it out for you. Usually it takes a couple of weeks to sort it out. And then I had somebody else with literally a zero credit score, had never gotten credit, doesn't have a phone, doesn't have a credit card, has no any sort of credit whatsoever, which was like, okay. So have you guys ever had that with somebody has zero?
Were they trying to buy like a log cabin or something? Like,
Yeah.
what are they trying to finance if they don't exist on the grid?
A lot of people think having no credit is good credit. Like people really think debt is bad for credit, and actually
Yeah.
managing debt is what it takes to build credit.
Yeah. They
So
want to
this
see
is
that
like
you can handle some sort of credit, right? Versus like, oh, I don't have any. Zero does not mean good. It means that you're unproven, essentially.
Mhm.
I
This would
have
be
had that situation.
if they had a landlord who they've been paying for a while, that could come on, this could help
This
them.
guy, he lives at home. This guy just lives
I
at
know.
home with his
Letter
parents
from
and
a
he's been
mom.
told, don't get debt. So he never did.
Interesting. I had a situation where there was a spouse who she was on her father's credit card and her father paid her insurance, even though she was married. And it came up, and I'm like, "Whoa, what do we do here?" We wanted to use the income to help qualify, but actually the lender was okay with using a percentage of her income to contribute. We didn't wind up needing it, but that was a situation where we had like a zero credit score, and we all kind of had a chuckle about it. It's like, oh, we maybe it's time to move her onto her own credit card so she can
Yeah.
start reporting. But the income and everything was there, so the lender was a little bit flexible about using her.
Yeah, if you can get like zero, like, so if somebody does have a zero credit score, I found like as long as there's some co-borrowers or there's some other people to jump in and be on title, then it works. This guy wanted to buy on his own, didn't want his parents' help. And it's like, well, we kind of have to wait until you have some sort of credit. So you can get around it. I have had lenders tell me, hey, we can do this. The problem with what I came up with this file is that he wanted to buy with zero credit score, but then he also wanted to use net worth programs as well. So he wanted to have, because he had a whole bunch of assets, he wanted to be able to leverage those. And so finding a lender that had both a net worth program and would be okay with the zero credit score, I found that didn't really exist.
That
Mm.
doesn't exist. Yeah, it's interesting.
I
Like,
couldn't find it.
yeah, this is why we pre-qualify people and then we tell them to get a condition of financing because sometimes there are ways to get around. The story really matters of, he's obviously a great saver. He only uses cash. And in fact, I think that there's probably a lot of merit to that way of operating. Unfortunately,
Mhm.
how do you show that character that you can manage credit? I mean, you've been able to save that much money that goes towards that.
He's a great inheritor. Like he's
Ah,
really good at inheriting
So,
money.
that's a real unique skill.
I have some
Yeah.
clients that are also very polished in the inheriting resources
So
department.
so if that's the
Yeah.
case, you probably could have got this done somewhere private, but maybe it just would have been too
Yeah,
expensive to do
he sees himself, he had all this money, he's got a job, he's got a good job, but yeah, so he sees himself as an A borrower,
Mhm.
and so he was kind of rejecting all the, well, maybe we can do a private or we can do something else. And I do think that with the right relationship somewhere at maybe one of the banks, that maybe there is something that can be done with, people with lots of money can somehow bend the rules more than
Mhm.
can, I find. So I think there was probably a solution. I didn't have it in my toolbox. But one of the things I suggested is, hey, why don't we just wait? He had opened a credit card, but it wasn't showing it. Let's wait until you've got some sort of score. Let's check in a month and see what happens. But yeah, haven't heard if that's gonna work out for him yet.
Yeah, so
And
the
what a
advice
what a shock too to, you think that you're ready, you've got this down payment saved, you think that you've been doing everything right, and then I mean realistically, or I guess like textbook, um, you're gonna have to say it's gonna take you 2 years. So he thinks he's at the starting line, but yet the
Yeah.
starting line is a whole different world. What are we gonna look like in 2026?
Yeah, even
Right.
alternative lenders and some I bet there's an A lender out there who with 6 months of good credit might look at it if the rest of the covenant is good and LTV is low. I always tell people get a credit card, get a line of credit, use your line of credit to pay off your credit card and pay your credit or your line of credit down as much as possible. And probably within a few months he would have some kind of decent score. I wouldn't say 2 years, maybe a year.
Yeah, you need some sort of score. It was the net worth program and the zero credit score that was
Mhm.
really at odds for me. I think you can
Yeah.
find one or the other, but to have them both work together was like two exceptions. And usually you're good. My rule of thumb is you can probably get one exception. Getting two exceptions is a lot harder, and then you've got to look for some alternative lenders.
Yeah.
Fun. Yeah.
Interesting. Okay, so do we have
Uh,
headlines? What's going on
yeah.
in the world? Who knows?
Well, I know. Well, other than the tons of flooding that we had in Toronto this week, which was record breaking,
Mhm.
the mortgage rates are coming down like the floodwaters, right? I'm going to come back to that.
That was perfection.
I know that. I think I'm going to take that one on the road. So inflation is down to 2.67%, which is the lowest level that it's been since 2021.
And does that include housing? That
That
number?
does include housing, and the main factor for that was gasoline prices were lower than previous months. So that's what's causing that net effect to come down. But it does that 2.67% does include housing. If you take out housing, I think it's like 1.9%, which is below the Bank of Canada's target.
Mhm.
Who includes housing in their inflation targets? Who's it?
Iceland?
It's Iceland. Yeah, Iceland
Ice
and Canada.
Do you
Yeah.
remember that chart of all the different kinds of of inflation and growth that they calculate and they just pick one and call that the inflation number that they're basing their movements on?
Yeah,
How many was there?
ours includes inflation on mortgage interest rates.
Yeah.
And mortgage interest rates have been controlled, the variable rate anyway, have been controlled by the Bank of Canada. So I don't know how we're even able to untangle that mess to get our inflation down, but it's a good thing for sure.
Yeah. So that's the big headline, and I think that tees up a July 24th rate cut. The Bank of Canada is. I think they've got zero excuse now to not continue to decrease rates. I think that was the big headline for me.
I like that headline.
Yeah, it's good. The next one, we got the June real estate numbers. Hold on, I've got some banners for this. Let's get those going here. Hold on a second. So year over listings are up. The prices were relatively flat, but the number of sales, this is across in the GTA, were down 16%. So we're seeing a lot of people wanting to list their houses, but I think a lot of buyers are just on the sidelines waiting for rates to come down further. Let's see what happens. What's been your experience with that?
Do you think that that's a psychological response, or do you think that it's really based on affordability?
Which the buyer from the buyer side?
Yeah, like we say buyers on the sidelines, and I'm starting to think that that's not even, the right way to look at it, because it suggests that people are ready to go and choose not to. And what I'm seeing from a lot of applications is sort of the opposite. They're ready to go mentally, psychologically. As soon as they can do it, they will. But they're held back by the amount of mortgage that they can borrow. Prices, because prices are not going down. There's no room for prices to go down. So we have to wait for affordability to come back through a different means.
Yeah, I agree with that. I think there's no one buyer out there, but I think the general consensus is if it's going to cost me this much, I want to have, I've got boxes to tick, and it's hard to be in this environment where things are not moving. And certainly I have renewals coming up that were 3 years, like my 3-year renewals, and those people don't have any equity, or at least they haven't grown their equity. So refinancing is troubling. This is not a good time for them to sell. And so I feel the pain of them, but then from a buyer perspective and from a market perspective, I am glad there is no longer a frenzy for housing. And I think, we talked about this a little last time. I think it's because of all those small measures that have been taken to disincentivize, investors a little bit, and to incentivize. I mean, we haven't incentivized first-time home buyers enough, obviously. Just to say you can buy a pre-built condo that's not what everybody wants. For one thing, it's not big enough. It's maybe not being built where they want to buy. And it's certainly riskier. I mean, anybody who's ever bought a property that they're going to live in based off of a floor plan knows that that's a risky thing. You don't know, like, there's
Where are
so
you going to
many
be in
unknowns.
4 years?
Yeah, you don't know when you're going to get to move in. You don't know when you're going to need to get your mortgage closed. You don't know where your sofa is going to fit. You don't know when to give notice to your landlord or to whatever else. So that is not, I mean, I did that, and it was stressful, and I'm super glad that I did. It worked out well for me, but I bought at the time where they were pricing today's market prices.
Right.
And I think they're maybe going back to doing that, because otherwise, how are they going to sell anything?
And it's going to depend on your inheritance portfolio and your ability to inherit, because anything pre-construction requires 20%. Whereas we have home buyer incentives of 5% for an insured mortgage that can help out if you don't have that propensity to inherit great sums of money. But that's another, when we think of pre-construction, it's not necessarily easy for a first-time home buyer to take that path because of all, and then environmental fees and stuff upon closing. You need a lot of capital to do it, especially when it's priced on, aggressive or really optimistic future values.
Yeah. And if you are getting some kind of inheritance, living or otherwise, and I should qualify that living inheritance is just getting money from your folks basically while they're still alive, which I think is the best way to do it. If they can.
Chef's kiss of that's how you inherit money.
Yeah, we call it bank of mom and dad.
Your kids
right?
enjoy the fruits of your labor. Anyway, so but then if they are getting a living inheritance, especially, they've got other people chirping in their ear about what the risks are, and it adds another layer of second guessing and stuff. So I think we incentivize those pre-builds, but we're not really. I don't see where the incentive is for first-time home buyers in general to buy resale.
Yeah, I think the price has to. I mean, if there were pre-construction properties being offered below what you could go out and buy something used for, I think you have a
Mhm.
lot of more
Or
first-time home
even
buyers
equal
thinking
to.
equal. Well, like yeah,
They're
like
they're
there's
pricing
condos
them
now
for
for
projected value,
right.
right?
There's condos now for like 550 in the city in the core. I don't know enough about pre-construction, but I'm not seeing the ones that are coming to me are not priced at that right now. And I assume that it's just not profitable to build them at today's market value.
Mhm.
But what's the incentive for a
Yeah.
first time home buyer to do it otherwise?
Yeah.
Just buy something you can move into right away.
Mhm.
That's
Yep.
what I say.
Yeah.
But I think buckle up. I think next year is going to be it's a quarter century year. I think that so there's going to be some excitement around that. When we look back and we're talking about 25-year lows in sales, and we go 25 years. That's a long time. So that will next year will mark that quarter century, and I think with it is going to come a lot of activity. I think we're going to resume. Well, I've said this a million times. I don't think that there's any such thing as a balanced market when we have this little supply and so much demand. We've seen that it's obviously some fiscal tightening and higher interest rates have a massive impact on the flow of property movement especially in the GTA. But we're just going to have to see borrowing come back, monthly payments lower, and then buckle up because we're going to be off and running again.
That's that
I thought
optimism
for
from Dan.
sure you were going to give us some sort of conspiracy theory about every quarter century, every 25 years, like some Nostradamus
Ooh, I
type of
should look
thing.
into
Like
that. I
there,
like it.
I thought so. Well, do you guys want to play a little game? It's called
Yeah, let's play
Approve
games.
or Decline.
Let's dial it up.
Vaughn, you're up. What's the
Okay, so approve or decline. So speaking of 20-year lows, the inventory for commercial space is at a 20% vacancy, which is the highest it's been, and even year over year, last year it was down to like 15 or 17%. So it's continued to grow. Approve or decline, we're going to see these vacancies come down as businesses are going to mandate people come back into the office. Sean?
I'm going to decline. I think that the back to work trend will dissipate. I think there was a lot of energy around let's get people back into the office. Like they had these leases that they needed to justify on their balance sheet and they needed to get people back in. But if you ever drive around downtown on a Thursday versus a Friday, the number of people in the office is much lower. So I think we'll continue to see businesses as these leases come up not renew or to downsize, and that's why I've got a decline. I don't see a trend of that increasing back to the office.
Okay, well, I decline as well, but it's just because of my feelings, not because I actually think it's not a prediction. It's just I think yeah, I think going into the office 5 days a week stinks. And so I think that um I I am change is hard and I'm for it. Like I'm for a new vibe. I'm for people spending more time in their homes that they spend so much money on doing their hobbies, spending time with their family, caring for other members of their family. I'm declining going back into the office full time.
Well,
For
I'm
the
I'm
people.
gonna go the other direction here, and I'm gonna approve
Tell us.
this. Yeah, I think that my prediction
Alternate
has
lender Vaughn
been.
approving.
Vaughn
Yeah,
loves the status quo.
we're no. I mean, I didn't particularly enjoy my 5 day week in the office format, but I think that it will come back. We're at a typical bank, let's say, is pushing for 3 days in the office, and I think what I'm going to go right off the board and make my bold prediction is that one of these banks, I think it's going to start in the banking sector. They're going to post record high profits, and they're going to be the bank that has the most people in the office. and the other banks, we're hive mentality. When people call us sheep, I'm like, we are. This is humans. This is how we're able to cooperate and build these big cities, is that we sometimes go on a one-track mind with it. And I think that everybody else will follow suit. They'll say, oh, look at this bank. They had their employees in 4 or 5 days a week, and they're successful. And it's going to open the floodgates, and we're going to be right back to where we were a couple of years ago. So I'm going to approve that one.
All right.
Nice.
Is it my turn?
I'll go next. Do you want to go, Kristen?
Sure. I have one, but I was thinking of another. Anyway, I'll go with my original. The numbers are now starting to die down in the States in terms of inflation. There's whispers of them starting to cut rates. So I guess approve or decline, the US is going to start cutting rates, let's say by the fall. Sean,
What do you want to go for?
approve or decline?
I'm gonna decline. I think that the first Federal Reserve cut comes after the U.S. election. So I guess that happens at the end of November. I'm calling that the winter. December would be the first possible rate decline by the U.S. Federal Reserve.
Assuming there's still just one United States after the election. Okay.
Yeah, that's right.
Okay. Fun.
Lots of assumptions.
I stayed up too late last night watching the Republican convention or whatever. What a circus that was. I don't know that the future is in great hands. However, for this one, I'll say I'll approve. I'll say that the Fed will cut rates. It'll be, I mean, it's sort of based on what I'm hoping for Canada. We don't want that spread between the Fed and the Canadian overnight rate to get sort of greater than 1%, which is not right now. We're still in the safe zone. But if they cut, it's going to help keep Canada's dollar strong. So based on that, based on some optimism and, not really based on a crystal ball that I don't have, but I'm going to say that they'll cut.
Kristen, what do you got?
Oh, do I get... Well, I think mine is based on optimism as well. What's that?
You just want to ask the question rather than...
Oh, yeah, no, I forgot I got to answer as well. I will, you know what? I might decline because I just feel like, and I don't feel super optimistic. You know what? I feel like if they were Canada, they will hold, but they're a little more feisty down there. So maybe I do approve.
More shoot from the hip, eh?
Their economy is stronger as well, and I think some of that is they brought some manufacturing back into the U.S. over the last couple of years. I think that's a good lesson for Canada to learn as well, and I think that we are. I think that even under the current administration, that we're bringing back even like pharmaceutical manufacturing into Canada. So more business is the proof is in the pudding there. If we want to strengthen our economy, let's bring back some manufacturing.
Great. Okay, I've got one. Will the bank...
Sorry.
We got another joke. I'm kidding. So will the Bank of Canada cut rates by more than 0.25% during their rate cutting cycle? So it doesn't have to be at the next meeting, but will we see something in the 50 basis points, 1%? Do you think that is in our future? Kristen, I'm going to throw to you.
Not for July. I feel like a decline. They won't go higher than 0.25%, especially soon. If they move too slowly in 6 months, they will drop it by 0.5% or whatever, and everyone will say they waited too long to cut rates. We were saying the whole time they should have started in April or whatever. Right. So short answer, decline.
Nice. Vaughn?
I'm going to approve this one, actually for the same reasons, is that they probably did wait too long, and at some point, they're going to see that they've hit that critical mass, and we may see 50 basis points, we may see 75, maybe even a whole percentage point. By the time that they do it, it'll be too late, and then they'll make a monster cut.
Yeah, I'm going to approve with conditions on this. I'm going to say that they'll eventually do that for all the same reasons Vaughn said. I think I like your point too, Kristen, that they're probably going to. I don't know if you said this, but I think they're going to go slow and steady on it, and I think they want to be seen as the prudent Bank of Canada. I think they've got that reputation, and I think they will slowly cut. As they say, rates take the elevator on the way up and they take the stairs on the way down. And I see that happening going forward.
Mm-hmm.
All right, got one more for you guys. So we're seeing a lot of congestion. Traffic's at its worst point in Toronto. There's a ton of people here. Should more people consider moving outside of the GTA, the Golden Horseshoe? I'm talking like northern, more rural. Should we be focusing on populations outside of the Golden Horseshoe? Vaughn, what do you think?
You know, a lot of my mortgage clients these days don't even own automobiles. So, I think that Torontonians are adjusting to transit system. So it's not even a possibility for some people to move out without really changing their entire lifestyle. Should they? It's not my business.
Approve or
What do you
decline?
think, Kristen? Approve or decline? Yeah.
I will say decline.
Okay. I want to talk about how old Vaughn is to be saying automobile. You just aged yourself big time.
Oh boy,
Back in my day,
1991.
we had our automobile.
Should more people move out of the GTA? I'm gonna approve with conditions. I think people did big time move out of the GTA when COVID hit, and now look at the cottage market, look at the markets sort of outside, and going back to people getting called back into the office. I mean, there are studies, I've heard there are studies where moving out and commuting so that you can afford a bigger house or whatever your house is costs the same, because you end up paying in time, inconvenience, items and food, etc., gasoline, maintenance for your car, etc. So what did I say? Approve with conditions? Maybe I decline with conditions. Why don't you
Just
go
send that
sort
one back
yourself
up.
out with your job, see if you really can raise those chickens and work remotely, and then you can move out of the GTA.
Yeah, I'm actually going to approve with conditions. So I know you said decline with conditions. I'm going to approve it. I think that we're going to. So for one, I think my concern with it is all the opportunities are here in the GTA. Vaughn, like you said, the lifestyle is totally different. You need a car. But if you move to the suburbs, if you're moving to Pickering, you need a car as well. So I think that there's, places like Sudbury and Timmins and maybe Sault Ste. Marie. There are up and coming neighborhoods there and communities of people that are growing. I think we need to look at some of these kind of secondary markets, housing markets, and like how can we grow housing in those places and still give people those opportunities? Because you can work remotely. Maybe there's more opportunity. Maybe it's just a marketing plan for Sudbury or something like that, where we can get more people, and maybe that's just an opportunity for people to be able to afford a home at less than 500,000 for like a 3-bedroom. Move out there. It's a lifestyle change. It's not for everybody, but if you've got a great job, it's a great way to get a house.
Sounds like you just want fewer people to live downtown so you don't have to get involved in too much traffic.
Yeah. I want to be able to move. I want to be able to, the pandemic was great for driving around.
Oh,
I don't know if you guys drove around during that period, but like, hey, let's, we're going to go here. And you get there in like 20 minutes versus like 45.
Felt like Mad Max or something.
yeah. Nobody's
driving
allowed
around
to
the
cut that
wasteland.
out of context, you saying the pandemic was great.
But it
It's
just
really
felt like
nice.
we were getting away with something during the pandemic. Like we were just driving, like,
Yeah. Mm-hmm.
I
Yeah,
guess
it
we
was like,
were too, because you weren't supposed to leave your house.
Well, there was a moment where it was like certain things, restrictions were lifted. Or like if you had to go drop something off to someone's porch and you're like, it feels like it's nighttime, but the sun is out.
Yeah, I do want people to. I think we need to. The city can only take so many more people as it is. Like, feels like we're at capacity. There's certain pockets where, it feels okay, but then if you drive anywhere on like a Wednesday afternoon, I was hearing like traffic into the city at like 6 a.m. is like bumper to bumper.
Yeah. Yeah. There's
Like,
no time where it isn't rush hour.
yeah, exactly.
It's too many people.
Yeah.
Well, that's it, guys. What do you any final parting words for our next episode?
No.
Well,
Lovely to
next
see
one
you.
we'll have some news to report. We'll see what happens with the Bank of Canada, and we'll see how far they cut. I think that we're all kind of on the same page about 25 basis points, but who knows? We may have some bigger news to share.
Imagine they don't cut. Oh,
That'd be great. The outrage podcast is what we'll
the
call it.
outrage. That would be great for amusement for about 5 minutes. And then it would
Yeah.
be not great for so many other things.
It would just be us crying to each other, sobbing.
Yeah.
A lot of sighing, a lot
Good
of
drama, bad outcomes.
All right. See you next week, guys.
All right. Bye-bye.
Bye.